All right, ladies and gentlemen, this is going to be an awesome episode of SoCo's most interesting podcast. I am Mark Ditkof with our co-host, Chris Bongirno. Sir, today we're talking about some amazing programs, but I want to know from you, what is the most interesting thing that you took away?
Man, I'm going to blow your mind, Mark. My virtual background. I think it came out pretty good. I'm pretty excited about it. I already knew pretty much everything we were talking about. So my big takeaway from this, virtual background. How about you, Mark?
I love it. Yeah, you're the main guy today talking about some really cool programs for people that haven't had the assistance they've needed in the past. And so that's my big takeaway is if you are somebody that is in a special circumstance, and we're going to talk about those, and you've had doors shut on you before saying we just don't have what you need, now is the time we might have exactly what you're looking for. And so I am excited to have this conversation.
All right, Mark, let's head over to the regular podcast, everybody. Come on, let's go. Hello, everybody. This is Chris Bongirno with Mark Ditkof on SoCo's most interesting podcast. Mark, how you doing today, buddy?
Oh, it is such a spectacular day, and I'm very excited to actually talk about some of the new programs that are out that we're going to talk about today. So I think we should just jump right into it.
I thought we were talking about something else, but okay.
Whatever.
No. Okay, so we're going to talk about a couple new programs that are unique to the state of Colorado, Mark. And so anybody, I know we have at least two viewers, two subscribers that are outside of the state of Colorado. I would definitely look at your states if you're an agent or if you're in the market for buying or selling a home, what's available in your state, because our state will usually be out front and other states follow us on what's available in the secondary market, because that's what drives a lot of these programs is can the agencies that provide these turn around and get investors behind them. And so, Mark, what we're going to talk about today are two programs that are provided by the Colorado Housing and Finance Authority. And a lot of people have heard of them. They go by the acronym CHFA, C-H-F-A. And Mark, you've had some experience with CHFA in the past, correct?
Oh, many, many times. Most of our first-time home buyers we work with, even if they have some money for down payment, sometimes it even still makes sense to use their down payment assistance program because it is so beneficial with the typical programs that they've had, right? Where they either do the grant program that you don't have to repay, or they have the second loan program where you do have to repay, but it's a zero interest loan only due once you refinance or sell the property. And so such a cool program, very accessible, and it's really not hard to qualify based on credit score and income for the typical first-time home buyer. So great programs. And I'm excited to hear they've got a couple new ones they've brought out to even make it more incentivized for people to jump in.
Mark, before we talk specifically about these two programs, give me your feedback on from an agent's perspective. Buyer agent, listing agent, doesn't matter, just overall, how much more difficult is it for the agents involved or the seller involved when a buyer uses a down payment assistance program like CHFA?
So if we have a quality loan officer handling it, typically you don't see a difference at all. Compared to like a regular FHA loan compared to an FHA loan using the down payment assistance, I don't even know if there's extra documentation the sellers have to sign. I know as an agent, I don't think there's anything I have to extra sign between those two. But even as a seller, if it is, it's so minimal that it doesn't make a difference as long as the loan officer knows what they're doing. Because I know there are certain versions that require a second round of underwriting, which can cause delays if you're not ahead of it. And so, Chris, when you and I work together, I don't think anybody even knows. There are times where we get to the very end and a loan officer will say, hey guys, we're clear to close, but we're waiting on CHFA approval. We need a 2-day extension, right? Not the worst thing in the world, but it shows the lack of experience, in my opinion, when we deal with that. The only other thing that we're going to deal with when it comes to CHFA is that, to me, as a listing agent, tells me most times that this buyer does not have a lot of extra funds. And so when it comes into play, when we get into the inspection, when they request things, many times we need to get things fixed because they're not going to have the funds to fix it after. And so that's a little bit of a tell right there. But again, minimal. Good loan officers, you're not going to see a difference.
Yeah, and that's important because I wanted to get your feedback on that because a lot of people will discourage people from working with CHAFA buyers. And as an experienced loan officer doing a lot of CHAFA loans, like you said, that second level is called a compliance review by CHAFA on a couple of their programs can cause a delay. Sometimes they're very particular on what they're looking for because they're looking at the file differently than a credit underwriter than the lender. They're looking for some specific things because they sell those loans as investments on the secondary market, and they have to meet certain compliance requirements in order to provide those kind of programs. So let's move on now. We're going to talk about two different programs, Mark, and the one that you currently have experience with right now, we're going to talk about second, so that if we've got a little bit of extra time, we can kind of fill in some information with some extra questions I might have for you on it. I've got a couple buyers approved under that program. They haven't found their homes yet. But let's talk about this other program first. And rather than give you guys all the technical names of these programs that we use on our end, I'm going to describe them to you so that when you do talk with a loan officer, whether it's myself or someone else, you're able to describe what you're looking for if you're interested rather than coming up with the name, because I don't think the name will stick with you and you're probably not taking notes, which is okay. So this program is designed for people that are permanently disabled. Okay. And CHAFA used to have a program for these folks, but it was very restrictive on income. It was very restrictive in terms of the condition of the property, and the home inspection had to be underwritten, and a lot of extra things. But the biggest challenge was a very low income limit. It was very difficult to qualify for home because you had to have very low income, but home prices were high. Make sense, Mark?
Yeah, the debt to income ratio wouldn't really meet when you can't make enough money to afford the house, but that was the expectation that you didn't make enough
Yeah.
money to buy a house. Yeah, no, it makes sense.
So this program is really, it's been tweaked. It's a little bit different and brings over some of the characteristics of the other loan. We're not going to get into those, hey, this was also available. We're just going to talk about the program as it stands today, because I think that's the important part. So in both of these programs, the one we're talking about here for disabled customers and for the other program we're going to talk about later, there's two things that I want to talk about that are applicable to both. One is that everybody on the loan has to take a home buyer education class. Doesn't matter whether you're a first-time home buyer or a second-time home buyer or a third-time home buyer, you've got to take the home buyer education class if you're on the loan. Secondly, the assistance on both of these programs comes as a silent second. What that means is that the assistance comes as a 30-year fixed rate loan with no monthly payments and an interest rate of 0%. So it is, in a sense, free money that you're borrowing, but you do have to pay it back. And when you have to pay that money back is when the first mortgage gets paid off. So that's when you sell your home and pay off the loan, you win the lottery and you pay off the loan, you keep the loan for all 30 years, or you refinance. So anytime you pay off that first mortgage, you're going to have to pay your assistance back to CHAFA. Keep that in mind. One thing that's also available on both loans is the maximum amount that you can get as assistance is $25,000. Let that sink in.
That's a lot of money.
Let that sink in for a second. That's pretty cool.
Yeah. So can I ask a question?
No.
Do they still have the same minimum contribution from the buyer, and then they pair it with that 25,000? Because that minimum contribution for the CHAFA programs I know is $1,000, right? The buyer has to have $1,000 into the deal, and that it can even be a gift from a family member, but they have to have that. So are we taking that and now we're adding 25, so you could really have $26,000 into the deal? Is that what I'm hearing?
No.
Okay.
$500.
Oh my gosh.
So even less
That's
money.
nothing.
So even less money than the regular down payment assistance programs through CHAFA. So it's $500 contribution. The other thing that's nice about the programs, both of the programs, is that there is a statewide statewide income limit. And in both cases, it's over $100,000. I'm not going to go into specifics on that because in terms of what that dollar amount is, because it could change in 6 months, and I want the video to still be useful. So it's over $100,000, won't come down under $100,000, I'm sure. So $25,000 assistance. People on the loan have to make less than $100,000. Got to take a class. Need $500 into the deal. So what's the requirement for the disability program is that someone with a permanent disability must live in the house. Okay? They don't have to be on the loan, but they've got to live in the house. Okay? And what's great about that is we don't have to use their income to qualify, because if they're not on the loan, we don't have their income to worry about, right? And you can have co-borrowers, right? And so if they make $96,000 and the disabled person, their disability is $12,000 a year, they can still get a home that they're going to feel comfortable in, that they can afford. And we don't have to worry about those really low income limits. The other thing that's nice about this program is that typically the majority of the customers are going to have Social Security disability, okay, SSI. But if you are a veteran and you have a service-related disability and you're receiving, I think he sneezed. He either sneezed or he was kidnapped. I'm not sure which.
I was trying to be quiet. Thanks for pointing it out, though.
So if you're a disabled veteran and you've been, receiving service-related disability, you're also going to qualify under this program. So really super cool. Now that $25,000 mark can be used towards down payment. Okay. It can be used for closing costs, and it can be used for the buyer's agent's commission. Okay. So as a buyer, gives you a lot of negotiating power that you don't have under a lot of other down payment assistance programs, because you've got that big chunk of change, that $25,000.
So, Chris, I assume I don't have to use the whole $25,000. That's the first question I'm going to have.
You do not. You do not.
And so, just real quick example, I'm buying a $300,000 house. I'm using this program. I'm pairing it with 5% conventional or 3.5% FHA. Doesn't go with conventional. Okay.
Let's use FHA.
Okay, so we're doing 3.5% FHA. That would be $10,500 for the down payment. That leaves me $14,500 to use for closing costs, buyer agent commissions. Do we have opportunities for rate buy downs? Do we have opportunities for debt pay down, like VA loans do, anything like that? Okay.
No, but there is a way to qualify for more, and I'll explain that in just a second. So it can be used for down payment, closing costs, and agent commission. Those are the three things you can use it for. So let's say in your example, Mark, the customer only needs $15,000, right? And you might say, well, just take the $15,000. How much extra does it cost you as a homeowner, as a borrower, to take that extra $10,000? Zero, because it's 0% interest, right?
Well, not only does it not, it actually is a benefit, right? Because now you're not paying interest on the other amount of principal that's not going on that extra 10,000, right?
Exactly. So let me clean that up and explain that to folks just a little bit differently. Let's say your loan amount with a standard 3.5% down payment is $200,000. Your loan amount. Your loan amount is $200,000. And let's say you have this extra $10,000 left over that you don't really need. Well, now, instead of borrowing $200,000 at, let's say, 6.5% interest, now you can borrow $190,000 at 6.5% interest. Not huge numbers, but every penny counts, especially in real estate. So you're going to have to pay that $10,000 back one way or the other. It's either going to be part of your first mortgage or it's going to be part of your second mortgage. And the second mortgage is 0% interest. Why pay 6.5%? So there you go. Good question. And I was going to hit that, but I'm glad you asked the question. Any other questions about that disability program, Mark?
Yeah, who determines the permanent disability? Do you have to be on certain programs to be? And I know you mentioned the veterans with disability, but if I'm blind, does that count? If I'm deaf, does that count? If it's
So
a
what we're gonna
physical disability,
so we don't care. Okay, as a lender, we're
okay.
not going to do any determining factors. There's a couple. I'm not going to get into the weeds on how we document it because most people, the vast majority of people, are going to fall under one particular way that we document that, and that is with a recent award letter from Social Security. Because 99% of the people are going to be getting Social Security disability, I would guess, somewhere in there. Of course, veterans, and we get the documentation for veterans as well. Their certificate of eligibility will typically have their percent of disability on there. So there's ways to determine it must be permanent. So no, hey, I'm on workers' compensation getting disability. Until that's been dispositioned and you are fully disabled and receiving permanent disability, you're not going to be eligible because it's a permanent disability. There are ways
So
to get
Chris, I'm just going to say,
information from doctors and so forth, but that gets into the weeds. And if you need to do that, your lender will be able to walk you through that process.
so this sounds like a phenomenal program for people that maybe don't bring in the income or don't have the down payment that they would have needed previously. They either are permanently disabled or maybe a caretaker of somebody who's permanently disabled. And this now gives them an opportunity to go get that home, stop renting, and go get that home that they've always known they'd like to have. This is just a program that's tailored towards those people to say, now is your time.
Yeah, it really bridges a gap. Because like I said before, there was not a program that embraced the difficulties of disabled members of our society and help them bridge the gap with what I consider shelter scarcity. Right? Because if you're renting, that can be, and you're not self-determined with your property, that can add to a lot of stress for someone who's already in a stressful situation being disabled. Because in most cases, you can't just go out and get another job and make more money. There's a reason why you're receiving that fixed paycheck every month. And so this really helps with that higher income limit, with the $25,000 in assistance, with it being 0% interest, really gives a clear-cut advantage for home ownership for these folks that have, either a disabled family member or, themselves as the buyer.
I guess I have one more question, then we could probably jump into the other program we were going to
Sure.
discuss today. But the disabled member that doesn't have to be on the loan, does it matter if they're a minor, or is it just as long as they're living in the home? I mean, is that too much in the weeds? Is that a case by case thing?
It is my understanding that it's anybody who is permanently disabled living in the home, Mark. I'll be honest with you, I have not asked that question specifically about being a minor, but they've been very clear, a permanently disabled individual. So if you have a child that is receiving permanent disability, I would expect, and you have custody of that child, they'll be living in the home, I would expect that you would qualify under this program.
I think it's a great program that, again, is just opening doors for people that have had very narrow gap ways to walk through into homeownership before. And it's widening that opportunity, which is exciting to me.
Yeah, absolutely. Absolutely. So let's talk about the other program, Mark, and you have one going on right now. Do you know the name of this program?
Okay, so I know it as the first generation home buyer program. So that's probably not the technical name, but I think that's what most people in the industry are kind of calling it. And then it's geared towards people, and correct me if I'm wrong here, they and their parents can have never owned a home at all.
Negative. Never owned a home in
Dang
the
it.
Never owned a home in the United States.
Okay, I was pretty close.
You
But
were
you're right. I
pretty
mean,
close.
that does make a difference, though. That does make a difference because we have a lot of families that do come over.
Especially first generation or second generation folks. right? So it's important. They may have immigrated from a country where they, were very productive individuals and have chosen to retire in the United States, or something along those lines. And so it's owned a home in the United States. So I want to make clear, as a lender, we define typically as a lender first-time home buyers if you have not owned a home in the last 3 years. So if I bought a home 6 years ago and I owned it for 2 years and then I sold it and I've been renting since, technically, as a lender under most loan programs, I'm a first-time home buyer because I've owned a home more than 3 years ago. That is not the case under this particular program. So I want to make that differentiation because I know we're talking to agents and lenders as well, potentially. So keep that in mind. So what this really means, Mark, is that the parents, so when I say parents, if we have two buyers, it's both sets of parents. If we have three buyers, it's all three sets of parents. If it's one buyer, it's the one set of parent, right? And what we're looking for is that the parents have not owned a home in the United States and the buyers have not owned a home in the United States. How do we verify that? What's your guess, Mark?
Well, I'd imagine they'd be able to do some title research to see if they've
You're
ever
wrong.
been on a chain of
You're
title.
all wrong.
I would.
It's easier.
They ask them. They just ask them. Have you ever bought a house?
They ask them. So what they do is people who buy and use chaff assistance sign an affidavit. And this time they're adding something to the affidavit. The affidavit typically includes their income and how many people are going to live in the home. So for this program, they add, and what do they add? A question: have your parents owned a home in the United States previously? No, they haven't. Okay. And you move on. So it's not title work. It's not a written statement from your parents. It's not a phone call interview. I've heard lots of speculation as to what that entails. It's really very simple. And the reach out isn't to the parents. The affidavit isn't with the parents. It's with the people on the loan.
So I'd like to throw an asterisk in here for everybody who's watching this thinking, ooh, I could just check no and I'd get all this extra assistance, right? And that would be considered loan fraud, and there are consequences to loan fraud. And so I would not encourage lying on those kind of documents. Am I right to say that?
$1 million fine, 30 years in federal prison if convicted, and the book is thrown at you. So I would highly recommend you not do that. And that I was gonna talk about at the end of this, Mark. But that's a very good point. And not just on that, people, on anything. And we're gonna find out eventually. Mark and I have had deals. I've had lots of deals in my career where somebody thinks they're going to be smarter than us, but if you've got a good loan officer, a good operations team, we find things that you would never expect. Doesn't mean necessarily it's a deal killer, but we do find out, and just be upfront right from the beginning, and especially with loan fraud, something like this, it's not worth it. It's not worth it. Mark, real similar things: $25,000 down payment, closing costs, buyer's agent's commission. 0%, 30-year fixed rate, silent second for the assistance, has to be paid off when the first mortgage gets paid off. Everybody on the loans got to take the class. Pretty simple.
Sounds easy.
Pretty
simple.
It
sounds like great. Again, so the biggest differences between this one and the Chaffa deal that you and I have done many, many, many times together is the old one, it would do typically the silent second, 4% assistance.
4% of the,
and this
4%
one is not
of the first mortgage loan amount.
Yeah. And so this one is not a percentage. It's a fixed $25,000. So the percentage change, right? The more expensive the house, the less percentage technically. But most of the time when you and I were doing deals, first time home buyers, we're talking in the $200,000 to $300,000 range. So they're getting somewhere between $8,000 to $12,000, or probably just round numbers in that assistance. Now we're getting $25,000 in assistance. And so it's just more money for these people that permanently disabled or first generation home buyers by the standards that we've discussed. And it's not necessarily overall just this miraculous program. It's just, again, widening the doorway for these people that may not have had the access previously because the 4% wasn't enough. $25,000 is enough. And so now they can walk through and be a homeowner.
And Mark, I think an important point here is to consider is how much it changes your negotiation as a buyer. Because if you're going in and you're not having to ask the seller to pay the buyer's agent, you're not having to ask the seller to pay closing costs, you may get repairs done, right? How you were saying, hey, if the person's coming in with Chaffa, they may not have a lot of money. And so, if you're selling the house and you're already contributing, $6,000 to their closing costs, and they're asking you to pay 2% to the buyer's agent, and now they want a bunch of repairs done, the seller's going to be like, probably not. But if they're coming in, they're not asking for anything, and now they're asking for $3,000 in repairs, maybe that seller makes that happen. Would you agree? From the real estate agent side, it's a great negotiating tool.
And if you're not asking me for closing costs and you're not asking me as a listing agent to pay the buyer's agent, that's price off the house, right? Because that's price that the seller might have been thinking they're going to have to bear.
Exactly.
And so instead of paying $300,000, can you say, well, I'll give you $290, but I'm not going to ask you for these other costs? The seller is very likely to say, yeah, that sounds like a deal, depending upon the circumstance. But yeah, I think that's super exciting.
Yeah, and again, you're getting money at 0% interest rate. That it does have to get paid back, but it really is free money. There's not a cost to doing it. And that's really, really amazing because you do typically have a slightly higher interest rate on the first mortgage. So you're not getting everything for free because Chaffa does need to make money. But the portion you are borrowing for that assistance is at 0% interest rate, which is pretty cool. And Mark, one of my clients we had approved before this, interest rates were a little bit higher. He was about $20,000 under where he wanted to be for a sales price. So interest rates came down a little bit. We were still off by a little bit, and he had a hard number. I could actually qualify him for more, but he had a hard number. I don't want my payment higher than this. I'm not putting myself in a bad situation. His parents came to the United States, U.S. citizens. He was born after they were U.S. citizens, which doesn't matter to anything, but just describing the demographics of this and how they progressed through it. He's never owned a home. They've never owned a home. Guess what? First-time home buyer, yes. First-generation home buyer. Now we're taking a big chunk of that $25,000 and lowering the amount that he borrowed on the first mortgage. And now he got his monthly payment to work. So now he's out looking at homes in his price range. But guess what? What does his parents get to do? Use the same program.
Because neither they or their parents, it doesn't matter about kids, right? It only looks up. Oh, what a cool thing.
So think about that in the fact that the parents can also use this program and purchase a new home.
But they just have to make sure the son buys first.
Why?
Because if they buy first, he's no longer eligible for it.
I'm sorry. Yes, I thought you were meaning because the parents wouldn't be eligible. Yes, and we haven't proceeded with loan application and stuff and those kind of things. But they're really excited because they're going to be able to go down that road now where they didn't think they had any chance because of having no money at all for a down payment. So, how's your experience going on the one you've got under contract right now? It's a listing, right?
Yeah, so it's my personal property that I'm selling as one of my rentals, and I'm going to be doing a 1031 exchange, and that's a opportunity for maybe the next time we do a video, we talk about investing in 1031 exchanges. So that's what I'm doing. And so the agent that brought the buyer, she has somebody that is using this first generation program. So when I talked to the loan officer, she had said, Mark, I've never done one of these, but I'm super excited about it. And I said, I've also not done one of these, but I'm excited to see it and work to see, because I'm not in a hurry to sell my property. If there are delays or hiccups that we run into, I'm not personally going to be negatively affected by that, right? I'm not waiting to sell this to buy my dream home or anything like that. So I told her, look, they asked for 30 to 35 days. I said, if it ends up taking 40 to 45 because we're all learning together, I'm okay with that. I'm excited to see this program move forward.
Yeah, that's amazing. That's amazing. Any follow-up questions for me, Mark, or do you think we hit all the bullet points we needed to on this?
Chris, I think you answered the generic questions. If anybody's got something that's more of a specific scenario that they want answered, I really encourage, Chris, you're obviously very well versed in it and you're ready to ask questions that you don't know the answers to. And
Yeah.
so if you guys, everybody that's watching, if you have questions about this program, Chris is going to be an awesome resource. Even if he's not in your area or whatever that looks like, he might be able to point you to the right resources. And I'm just really excited to see how this works. And I think it's going to become more and more popular as it gets more integrated into our real estate system.
Yeah, and Mark, how do people reach you if they've got some follow-up questions or would like to work with you?
Yeah, so if you guys want to reach out to me directly, you can find me on all the major social media platforms at Onyx Home Group. That's Onyx, Onyx. That's Facebook and Instagram and TikTok and all those fun ones. Chris, how about you? Where are people finding you?
The easiest thing to do, folks, is right down below in the comments section. I'll have all my contact information down there. Mark, as always, super fun to talk with you about the exciting world of real estate and lending. I look forward to getting together again next time.
All right, let's do it.
All right. Everybody, thank you again for tuning in to SoCo's Most Interesting Podcast. We'll see you next time. Have a good day.